Hello traders, welcome to this video how to day trade any market. In today's session we're going to be looking very closely at day trading the ES, and I'll show you three trades that I executed. Two of them you'll actually get to see me execute them live in a recording. I actually started to trade the ES and halfway through I thought I'll turn the recorder on, so we'll go through and have a look at those. So we're also going to dive in deep on some other setups that we could have taken just before my live session and just after, and I'll explain in great detail exactly what I'm looking for. So look, this session might go for 30-40 minutes, but if you truly want to earn a full-time part-time income day trading high probability strategies, stick around because we'll dive in deep. Now if $1,000 a day is not enough for you, you simply increase your position size, trade more contracts. However, at the same time, we never ever risk any more than 2%, and as you build your accounts you want to drop that risk down to 1% of your account, even better still 0.5, depending on the number of contracts that you're trading. That allows you to then add to your positions. Now typically you'll see me trade at around a 1% risk, but that works for me. Okay, I'm in my 60s. I don't want the really high pressure, but what I'm looking for is those high probability setups. Now what I also cover in this session, so session 110, is you can apply to futures, forex, or stocks. It doesn't really matter. Now I do need to pull up the disclaimer. There is a risk in trading. Don't trade with money that you can't afford to lose. Stay on the simulator until you're consistently profitable. Very quick advertisement. If you haven't already downloaded my ebook, for my free ebook, The Truth About Day Trading, there's a description link below, so you can go down there and download that. I'll also be referring to a number of spreadsheets, or a spreadsheet, in which you'll be able to download as well. So you'll find that, and a small training video, a training video on how to use it correctly. Better still, make sure you subscribe to my channel, and better still again, make sure you become a member. For $197 you get all of my indicators. There's hundreds of hours of videos, there's over 35 PowerPoints, but don't worry, you don't have to learn all of my setups. You just want to focus initially on trading with the trend. You get all of this for $197, and on top of that I have a special going at the moment where I'll also gift you 8 live coaching sessions. That is, I run every Tuesday and Wednesday evening, 6 p.m. to 8 p.m. Eastern Standard Time, a 2-hour class on how to trade my strategies, psychology of trading, money management, and much more. And so you get 1 month free. Now after your first month, if you wish, you can sign up then at $97 a month ongoing. My website price, if you visit the website, is $297 a month. So at the end of 1 month we will email you and ask you, hey, would you like to sign up and continue? You're not signing up for that initially. Okay traders, end of advertisement. Let's get into this. Traders, you'll hear me talk a lot about goal setting and gaining clarity around your trading, and this was from Paul J. Meyer going back. I've had this plaque here for what would have been now, close to 45 years, and it's something that I've lived by crystallizing your thinking, developing a plan, and show me a trade of it has a compelling future, and I'll show you a trade of it's almost certainly going to make it as a scalper and day trader. So you'll hear me talk a lot about setting targets, setting goals, but I'm also about, yes, you want to have a goal that's a stretch, but it's got to be somewhat realistic. Now one of the greatest challenges that traders have is really the size of their trading account. That is, they're undercapitalized because this is a business. But the other thing is mastering the trade, or having the right trading strategies. Now, for many of you, you would have heard of the late great Mark Douglas, and he wrote these two excellent books, Trading in the Zone and The Disciplined Trader. Unfortunately, he was taken away from us a few years ago, far too early, a gentleman in his 60s, but he was just brilliant with what the advice. And in fact, I say to all traders, the disciplined trader should be your Bible when it comes to day trading. The advice he gives in that book is this: what you want to do is become an expert at one particular pattern that repeats itself with some degree of frequency. To become an expert, choose one simple trading system that identifies a pattern, preferably one that is mechanical instead of mathematical, so you'll be working with a visual representation of the market. Traders quite often will ask me, how come you've got such a high win-loss ratio? Why do you kick butt? It's because I'm looking for patterns in the market, geometric patterns that appear every day. And for lower the time frame, the more often the pattern's going to appear. But at the same time, we've got to be careful that we're not trading a time frame that's too low, because you get a lot of what we call noise in the market. Now, whoops, here we go. Whoops, here we go. Sorry, I'm trying to get on to the next slide. So here is, and you'll get to see this when we get to the live trades. The dark blue line represents trading in the direction of a higher time frame. The smaller pullbacks are the pullbacks on my entry chart. I actually have three charts. I have an entry chart, an anchor chart 1, and an anchor chart 2. Now, it's not as difficult as what it may sound when it comes to trading with three charts. The anchor chart 2, I just really glancing at just to get an overall view of the much longer term, because we want to be trading in the direction of the tide. We want to be swimming in the direction of the flowing river, not against it. So we've got our trend continuation setups, which is where all new traders should start with. But then we've also got our counter trend trades, our reversal trades, our trend correction trades. And so you'll see me quite often in virtually every trading session. I'll take these slightly more advanced, and I recommend new traders initially stay away from CT trading, because really what you want to do is master one simple setup to begin with, and then expand your knowledge as you go. Now, in today's session, we're going to be looking at three trades. We can see here I took this is called a T10. It's really a sort of a trend reversal confirmation. Believe it or not, this top one is actually a trend continuation. It may not look like it, but on the higher time frames, we were still in a downtrend. On the entry chart, we just happened to have a deep retracement. Now, you'll see this live on the video in a moment, that I was very close, within one tick of being stopped out. So when I enter a trade, traders, I like to place my stop, and a maximum stop of 10 ticks, by the way. Look, sometimes it might be sitting up there at 12 when I enter a trade or whatever, but I'll pull it down, never ever more than 10 ticks. So I'd have my stop one tick above. Okay, and it then formed a double top. If I wasn't already in this one, I certainly would have jumped in on this one, and then I jumped in this one down here. And I was actually targeting the pivot, which I'll show you very closely in a moment. Now, in all, this was all over and done with within 10 minutes. I'd hit my target. Now, my target here for this particular market is around 320 to 350 a day per contract, and I'll talk more about that when I get to the spreadsheet in a moment. Now, so starting off, you would be trading with the trend like, and for members watching this, there's, for an example, a T20-1. That is just a no-brainer entry. But all of these, this one, that would have been, they're all rules-based strategies. Now, I want to quickly run through how much money do you really need to do this? Now here's where a lot of traders will switch off, by the way, and they wonder why they're not making the money. And it's not meant to sound condescending, it's just factual. This is a business. If you want to succeed in this business, if you're undercapitalized, you're not going to make it. If you're desperate to make money, you're not going to make it. You see, with day trading and scalping, what I've found over the years, and I've been now trading for 28 years, is that traders tend to bring their personal issues to their trading. If you're impulsive, if you're suffering from money issues at the moment, if you're desperate, trading is going to be very, very hard for you to master until we can master the mind. So until you master the mind, you won't master your trading. Now, what if you do have some of those issues? What we want to do here, traders, is get you to start off on a smaller account, and with our NLP techniques, with the psychology of trading, we can rein that in, but you've got to be willing to put the work into it. Now I also believe in what I call the POQ, the power of quitting, and that is when I hit my daily target, I like to finish for the day. I don't want to be sitting there 4 to 6 hours a day. Why? In my 60s, I've got kids. I've now got a great grandson. I've got 7 children. What is it now? 14, 15 grandchildren. So I want to live a lifestyle as well. Now I should also say that your results may not match mine. I've been doing it a long time. I'm also pretty much 98% disciplined. Sometimes I break the rules. I'm still human. So your results should match mine exactly, should you follow the rules with my setups. Now here's what the game changer is, and this is where I really want you to start to sit down, pen the paper, and map out your future. $1,000 a day or $5,000 a week would be a game changer for basically 95-98% of a population. How do you do that? Well, first of all, you want to have realistic goals when it comes to trading. Now if you want to really take it easy, just going for $100 a day on 10 contracts. Okay, you don't even have to increase the number of setups, just increase that you're trading number of contracts that you're trading. Now you may go, that's obvious, and it's all right if you've got the money to trade, but what if I don't? Well, I'll show you how to get that money in a moment, and I'm not talking about funding programs either. As you step it up with experience, 300 to 500 a day per contract is realistic, but you've got to get there first. So how are we going to do it? So first of all, you'll hear me say regularly, get rich slowly. This is not a get rich quick strategy or even business. Yes, you'll hear of the occasional person that makes it big time very, very quickly, but that's pretty rare. Realistically, we know that over 90% of traders will actually lose. They don't make any money, and there's some really solid reasons for that. So what we want to do is set realistic targets, trading only a couple of different setups initially that are trend following. Now in trading the ES is probably the most liquid market besides Forex in the world, and typically on a normal day you'll see 1.5 million contracts actually traded. I'm recording this during the summer holidays at the moment, so we're seeing typically around 1.1 million contracts traded a day. So what you're after is what I call 4-6 step scalps. That's after any losses. We're after quick scalps. Now I like to get in, get out, get paid. That's my philosophy. Now you can also go for larger targets. Remember a couple of minutes ago I mentioned the T20-1. The T20-1 will identify the start of a potential new trend. So if you enter there, you can go for your much larger targets if you want to stay with the trade. I don't want the stress. That is, I like to get in, get out, look for another setup, and look, that suits my personality. We're all different. Okay, so what you're after is between 3 and 4 net trades a day. Now I want to talk about something that's really serious now, and that is the funds required to trade this market. Traders are misled every day on YouTube, in YouTube videos, Google, etc., on how much money you need. Yes, there's day trading margins. You can get in and trade the ES with $1,000, however, or even less. However, if you're a new trader, you're almost certainly going to blow your account a number of times if you take that approach. And the reason being, you go and drop $100, you're down 10% on your capital. Do that a couple of times and you're down 200, 300, 400%, and your account's wiped out. And what that does psychologically is massive. So we've got to start by trading and having the right amount of capital. So to trade the way or the time frame I'm about to show you, you need between $5,000 and $6,250. Now you may say, oh Ray, I don't have that sort of money. That's fine. You can start by trading a micro account, which is 10% of the value. So what you're looking at here is you need $625. You can start from there. Now if you go on net $32 a day, now what that is, you see on the micro it's $1.25 a tick. That's 25 ticks a day. That's all you're after, is 25 ticks a day. So that's after commission. So hence I said you want 4 6-tick trades a day. We're talking about here after commissions. Now here's what this means. Within 12 weeks you're earning $1,500 a week. I'd better say legally, potentially, but that's what you'd be earning if you were earning 32 a day, and your account size is now $7,400. What you can then do is roll over to the big contract. Now a lot of traders, this is where they just ruin their potential career. They'll, let me just say this, so many people will say, okay, I'll work for the next 40 years and retire with a pension of maybe $1,000 a week or so. And that's what they do. Where in this business, you work at this for 6 to 8, 12 months, and you have a potential of earning $10,000 a week for the rest of your life. What's the difference? Well, it's massive, isn't it? All you need to do is exercise patience. Time's going to pass anyway, traders. So once we've got 6,000 or 7,000 in our account, we can now roll over. Now the reason we need 6,250 is the strategy I'll show you in a moment. I may have a stop loss of up to 10 ticks. A tick is worth $12.50 in this market. So 10 ticks is $125. Now here I'm after, it doesn't matter what market I'm trading, I'm after a 5% return per contract traded, or the funds I've allocated. That's just a little thing I like to work with. So here, and I've had to round this off, it actually would have come to $312.50. With my little calculator, what this tells me, if I start off with that and I net $313 a day, within 11 weeks I'm earning 10,000 plus, actually 11,000 a week, and my account has grown from 62 to $57,000. That is a reality. And how this table works is you only start trading a second contract when you double your money. You only start trading 3 contracts down here when you triple your money. So we're using the market's money. Now we can go and put some ridiculous unreasonable figures in here, and I can show you can get there in a week or two. It's just not realistic. This is, we're using the market's money. What you may choose to do is you might have 40, 50, 60, $100,000. Start off on a micro, make all your mistakes. Within a month or two, then you go to a big contract. Month or two, then you can maybe put some more capital in the market. So what this means is within 11 weeks of going on the big contract, you can be financially secure the rest of your life. Now the other option, and there is another option for experienced traders, is rather than be trading with a 10-tick stop, you can get away quite comfortably with experience with an 8-tick stop, which means you only need $5,000 and you can be there, save yourself 2 or 3 weeks. I would generally, and there's a method to my madness why I want a 10-tick stop, and that is because on the anchor chart, my higher time frame, at times I'm going to be waiting for that candle to close, and you'll see where I put my stop loss in a minute. And so that will mean sometimes that I need a larger account to stay within my money management rules. For you would be, for most traders, a maximum of 2%. So this is the bottom line. You start off with 625 based on 32 a day. In 12 weeks your account's now 7,000 plus. You then roll over to the big contract. Based upon that, $313. 11 weeks, you now have got the 10,000 plus per week potential. Now that's taking you 23 weeks to get there, less than half a year. Now that's from the time you go live. Now you can break this down here, where what if you think, crumbs, I could never do that. What if I only go for $10 a day? If you go for $10 a day on the micro and then roll over when you got $6,000 capital, then you go to a big contract, and instead of going for 320 or 330, whatever it was, you only go for $100 a day. You're there in 20 months, the same $10,000 a week income. That is the reality of this business. The fact is, and I can guarantee you, thank you for continuing to watch this. It shows that you want to learn the right way. But you know what? So many traders would have logged off by now. They don't want to hear this. They want to get rich quick, and they wonder why they continually blow their account. So then the next question is, now, how are we going to do this? How do we put this together? If you're going for 5-6 step scalps a day, did I say 4 before? I think it was for less than what I'm talking about here. But overall, if we want to be netting around that 320, I need 5-6 tick trades a day, or 4-7, or 3-10 tick trades a day. Now if I'm trading what we call the T20-1 after 3 waves, may sound complicated, easy once you see what I mean. You only need 3 trades a day to be achieving this on the ES. And of course there's a ton of markets. You've got currency futures, you've got I love the Russell, the Dow, you've got oil, which is fantastic. So you've got a whole range of markets. So what we're about to do is go to the recording, and we'll go to the charts. As I said, I'll probably go 10 minutes extra what I'll normally go, because I'll show you the live trades, and we'll go back to the charts at that time, and I'll show you pre the trades I took, the opportunities, and what happened after, because there's really so many opportunities. Now one thing I do want to say is, I like to say we get paid to wait, meaning at times we need to be patient. Sometimes we'll sit there and we don't have a trend, there's no market movement, and that's where we've got to learn to sit on hands. So as we go to the charts, here's what I'm looking for. Where are my pivots and Camarilla pivots? Where's the prior day's open, high, and lows? Open, high, low, and close, our major EMAs, intraday swings, and the current day's open, high, low, and close. Now if you're a brand new trader or someone looking to trade, oh my goodness, what does that mean? It's easy when you're shown this, and in fact all of these are basically predictive indicators, and we see them plot I mean, you've got indicators that will plot them for you. And as a professional trader, I want to trade into these, and thousands of other professionals, this is what we're using. We're trading into these. They act as price magnets and major support resistance levels. Now I'm going to play back this video, and I don't even think I had sound on it, because I started to trade and I thought, let me hit record, set up, and so let me go with this, and I'll explain exactly what I'm looking at, and then we'll go back to this chart shortly. Now first of all, I jumped in on this trade here, and so it was already underway, and that's what I thought, let me hit record and just discuss this over here, and I'll explain it better when I get to the charts. This is called angulation. Very simple concept, but a real money maker when you know how to trade it. So let me hit this, and I'll explain as we're going along. So I just had a winning trade here, and that was actually for members watching this was what we call a T10 on the anchor chart 1. So I just had a really good T10 on the anchor chart 1. Now up above here, just there, that's called a Camarilla a Camarilla pivot, cam pivot. Let me get that right. Now we popped through, and so I was pausing the video in between looking for trades. Now let me stop right there. Now first of all, what you can't see here, oh well, over here it is. I'm actually trading here in the direction of a higher time frame. Here's my anchor chart one. By the way, that's called a MACD BB. You don't need that. Okay, I do have it for NinjaTrader. I don't have it for other platforms. It's a nice tool, but once again, it's just a tool. The key thing is price action is what's the overall trend of the market. Okay, so I've got a higher high. I had divergence. It's what I call a T12. It's a no-brainer. Now sorry, I got a bug attacking me here. Now what I've got right there is what we call a 10 tick stop loss. Now I could have entered earlier, by the way, but I wanted to wait for my anchor chart one to confirm the trade. Now my stop loss is one tick above the high, so down here my stop loss would have been one tick below. Up here above the high. Over here, if I'd have taken that trade, and that was actually a 50% retracement, and yes, it would have hit 6 ticks, which is $75, which by the way is generally my break even. What was I going to say? My stop would have been yes, 1 tick above there. Now this is why stops are so important. Now what I'm about to show you here, this is a fatal mistake that traders still make, and I see it every day. I've trained now thousands of traders. I run both, by the way, a live trading room 3 mornings a week, and I run my coaching classes, and so I've got literally 100 to 200 traders in each room, and fortunately none of those hopefully move their stops for the wrong reason, and that is, watch what happens here. Now you'll see in a moment that the market goes up within 1 tick of stopping me out. Now if we do get stopped, and for members watching this, by the way, there was a T10 just there, but right on the pivot. Now what I'm saying there, traders, is if you're trading and you're selling right on a pivot, quite often you'll get this. You've got what we call a PB, or a pivot bounce. Now your best divergence trades, like just watch this here. Now I come up within 1 tick of stopping me out. Now I believe in what I call the law of probabilities. There are no certainties in trading, but there are probabilities, and we want to think and trade in probabilities of 20, and that's a key lesson you'll learn in the Mark Douglas book, The Disciplined Trader. Now just here we will reverse, and so it's just expanding the chart. Now what I'm just doing just here, by the way, is I'm compressing my chart because I want to check what's above me, because I'm thinking at this stage, look, it looks like I'm going to be stopped out. Now if I do, I'll then look for what I call a breakout pullback trade. I'll get a breakout, I'll be stopped, sure. I'll make a new higher high and look for a pullback and look for a long. So I'm looking for, do I have any pivots above me or any other major support resistance levels? And just there I can see I've got yesterday's close. So it's like playing chess. We're thinking forward, traders, what may happen if this happens, etc. So go back to this, I checked that out. Then we started to get a reversal here, and for members watching this, and for you as well, this is called a 2D, and also a T7, which is a double top basically. So here, yes, and sometimes people give me crap because I get them codes, but it just makes it easier by having codes if you've got a number of strategies you use. So that's called a T7, which is a double top effectively. Okay, so here you can see the support once again right there at that pivot level. Okay, so we see that every day. Now just there I've got another that's called a T20, and if you want to go for a larger target, so once again I was just double checking what's below me, and so if I can clear these major EMAs, now what on the entry chart, what I've got there is an 89 and 200 EMA. Now I'm just looking at the anchor chart here, right? A big picture view. So I'm just reviewing what's happening on the anchor chart there. Okay, and I'm looking to I'm still looking good. I'm rolling over. I've had major divergence. My indicators are rolling over. So I'm just waiting to get filled. Now what you'll sometimes see me do as well is I go to break even usually at 6 ticks or 6 steps, I call them, on the Renko. So by the way, each step here is 1 tick, okay, which is $12.50. I just call them steps. It makes it easy. For members watching this, here is a T20-1 right there. Okay, so and see how I've gone to break even just there automatically on my dome. Now what I'll quite often do, and I get filled, I'll quite often, if I'm concerned about a little pullback, and let me just pause this for a moment because I want to explain this here. I'll sometimes put my stop back where it was because I've got a fairly tight stop, and sometimes you get stopped out only to see it move again. Now I'm just taken my third trade, and this is actually it's called a 13B and a slingshot. So I've got a slingshot right here. My stop is there, and I think I was after 10 ticks. I can't remember now. I think it was 10 ticks I was after, and just waiting for that to come down. Now let me explain what I'm looking at. So what I can see down here are pivots. I've got yesterday's low and I've got a cam pivot, and so I know I've got an extremely very high chance of coming down and kissing that pivot. Now what will usually happen on the ES and on most markets, what we call stair step down. You don't usually go bang straight down unless it's a news announcement or a very fast moving market. And by the way, that was at 2:22 a.m. Central Standard Time, and so just on that point, the market closes at 4 p.m. Central Standard Time, and it reopens at 5 p.m. Central Standard Time, which is called the Globex session. And so during the Globex session, you don't have anywhere near the same volume, but it does give you some fantastic trading. Because I like it because it's slower. Okay, yes, you can slow it down if you trade the New York hours by increasing the time frame you're trading, but that also means you need a larger account. Okay, in fact, let me just pause this. I want to show you something here. So what I've got here is really my recommendation on account size requirements. Now if you're trading, say, the 4 tick here, I'm stating there you need 8,700. In fact, I recommend that you have around $10,000 if you're trading waiting for a higher time frame to give you a number of confirmations. Likewise here on the 2 tick, realistically you need 6,250 unless you're very experienced. Now once again, this goes against the grain of what brokers tell us, and I've got a lot of respect for people like Ninja Trader, etc., where they do give you great day trading rates. And by the way, this is not a broker recommendation, I'm neutral there, but day trading rates will get the inexperienced, you'll get the amateurs in, and they get caught up and they keep blowing your account. That's not what you want. You've got to have the right account size. So if you don't have the 6,000, 7,000, you start on the micro. So I've got a whole range of spreadsheets of things like that the tools that I give my members, such as this one here, where you can change the figures and tailor make your own trading plan. Now, so we stair step our way down, but there was another point I was going to make on that. I can't remember what it is now. It doesn't matter. All right, so we're coming down. So I'd be expecting very high probability we're going to get down here. So let's see what happens here. So we're coming down, and no doubt I'll go and see how I've gone to break even. So I'll just pull that back up. This is pretty much a very high probability trade, traders, and I'm just pulling it up. And the reason I might pull my stop up here is that I know that I'll probably get a bounce here. Look at my EMAs in this beautiful downtrend, and I've got a major price magnet down below, a major price. I've got two key areas, and as you'll hear me say, having one or two reasons for taking a trade is good. Having 5 or 6 reasons for taking a trade is even better. So what we're now going to do is, let me close that down and let's go to the charts, to the chart at about that time. Okay, so let me just expand this now. Look, I'll leave this little indicator on here. So all of the indicators I show you, I have for TradeStation, NinjaTrader. I don't have the MACD BB, by the way, for any other one but NT8. But if you've got say if you're using MT4, MT5, or any other platform where I haven't customized a whole range of indicators, nearly every indicator I use is stock standard but with custom settings, so you can set those up on virtually any trading platform and model everything that I do. And as I mentioned, everything I trade is a pattern. Now as we come down, I just wanted to show you what you would have been looking at. Now here, look at some of these moves. Now with that there trade is probably about a $300 move just there alone. So traders will say sometimes, why don't you trail? Well, you can do that, and I've got some great strategies in doing that. However, for me, I prefer to get in, get out. It just suits me. I just don't like the pressure of seeing that meter ticking up then going back again. So it just suits me. Anyway, down we come. We almost hit the pivot. We then have what we call a T3. Now a T3 is a very, very high probability reversal strategy. Note the angulation here. Angulation is where you see price action moving away very, very strongly. That makes it a very high probability reversal signal. Now for those that believe and like, I shouldn't even say believe, but those that trade with fib levels, that's an exact, basically from up here down to here, 38% retracement. If you're wondering how actively do I use fib levels, look, I'll look at them sometimes, but I'm not a real active. You won't see me apply it to every setup. I might do it as a matter of interest, but certainly if you do like fib levels, they can enhance your trading. But then you'll have a lot of situations like, if let's just see just here, I've got a cool little, we just look at that one there. Look, that's not even a 38% retracement there. Look, so it'll just vary. Anyway, you had a potential trade here. Down we come, and then I had a 50% retracement just here, and I thought I'd just throw that in. So from there to there, we actually popped down. If you had have taken that one, by the way, you would have been out at break even. It did tick down 6 or 7 ticks. Now I've got an entry, and this is called a T10. So I would have taken that trade. We'll go up here. We've seen these here, these setups that I've already taken. We then formed that double top. Now what I want to show you, these black lines, this is a swing indicator. If you and virtually every trading platform now, you can get these indicators for free. No need to go and spend your money buying indicators. Okay, so, or if you don't have it, just drop a horizontal line in at your major swings, and the reason being, they become price magnets. They become, really, it's like fib levels. They're like a self-fulfilling prophecy, because so many traders will trade into these levels. So just note this one here. Now further along, look at that there. See there to there, we come down, see that little tail there? We actually hit that right of a tick, and then we bounced. You'll quite often see me take profits and exit at these levels. Where I wasn't worried in this particular case was I had such a strong downtrend, and if I do this, look at the pivots down below, so I know that I've got a really good chance of going down there. And see that there, we call that a fanning of the EMAs. So when I get that fanning, I know that, hey, and I've got a pivot, good chance I'm going to continue on the way down, and then up we come. And for members watching this, we just had a classic 2B, there was another classic 2B, and finally we come down and look what we just kissed, the pivot. Okay, now these indicators are predictive indicators. Now we know that virtually every indicator is based upon price action. They're derivatives of price, but some of them, like your pivots, like your high of day, current low of day, and things like that, once again they're predictive because so many traders trade them. Now down here we then had a 2DA T7 pivot bounce. Now that is what we call a loaded trade, traders. So note here we're bouncing off the pivot. Your best, the best of the best divergence trades 99% of the time are going to be off a pivot bounce. Okay, so what we've got, and we call this a T12. This is a no-brainer. It's a T12 on your anchor chart 2, and it's a pivot bounce, and it's a T12 on your anchor chart 1 as well, and it's called a T3. Okay, we ended up then having a bet the farm. And last of all, I will finish on this one, be very, very cautious when you start to see the 89 EMA and a 200 EMA going sideways. So if we want to take a trade when we've got sideways, do you have any divergence? Now this is a custom divergence indicator, a zero lag, so it picks these up really well. Now I've only got that coded once again for TradeStation and NinjaTrader, but I give you the settings that you can set this up on any trading platform exactly the same. And so that turns into what we call a bet the farm setup, and bet the farms really kick butt. And by the way, it's still tongue-in-cheek. We never ever break our 2% risk reward ratio. So traders, what I've covered is a lot with you in this session. This is not rocket science. It's about learning the patterns, and the patterns consist of usually either divergence or pullbacks and EMA bounces, but they have different categories and different levels. And so come and join me in the classes. Let me teach you how to do this. Okay, it's not rocket science. There's hundreds of hours of videos you can watch, and I really drill down and break it down. You start off with there's one core strategy, and there's 3 very closely behind it that you follow that are trend following. You could, if you wished, just trade those the rest of your life. Just really trade your 2Bs and not look at anything else. You might have 2 markets up just waiting for your 2Bs. Now, as I also mentioned, there's a bonus where you can get 1 month of my coaching included. So thanks for watching, traders. Make sure you subscribe to my channel. Make sure you come and join me as a member. Traders, as always, I love day trading. See you on my next video.